As you know, we are the group of Grupo Argos, the Colombian holding company, and we would like to present you our risk management analysis. So let's get started. I am Santiago Castillo, and you know also Diego Veas, and we hope you enjoyed the presentation. So let's get started with this. With you, Diego.
Thank you very much, Santiago. Also from me, nice to see you again today, a little bit in a different perspective. So we tried, after that we have analyzed or before identified and analyzed the risks which Grupo Argos faces in their day-to-day business, and we tried to prioritize their risks. We have already analyzed, there were 5 in total, and we tried to take those 5 and try to see which are the most important in terms of Grupo Argos, in terms of level of risk. That means that which risk would have the biggest impact on their business, and also to allocate the budget we received from the government from about 1 million. We tried to analyze how much of that amount of money do we need for the costs of the risk treatment. So we have analyzed this according to this strategic risk chart, as you can see in on the screen, and we came up with this new allocation. So we think that the biggest amount of those this 1 million we received is going to be needed in those risks categories, if we can call them. And you will see why we have allocated this type or this amount of money for each one in the next sections. So, of course, we have tried to give you a big overview and try to take risks, different risks. We can explain you, or we can introduce you a little bit further, so we can use as many risk treatments as possible to give you, in our point of view, a better understanding in the case of Grupo Argos. As you can see on the screen, and as we have seen last week in the class, there are different ways how we can treat a risk to maybe reduce it, avoid it, transfer it to someone else, like in terms of an insurance or risk finance, which is also an option. And we try to pick from everyone or from each one so we can explain it a little bit better to you, but also it has to be related to our company, Grupo Argos. And sometimes, as you will see in the next sections, it is not always easy or obvious how we can tackle those risks and try to reduce or even avoid or whatever. So I will give the word to Santiago for the next slides, please.
Right, so let's do the coverage of the 5 risks that you already saw in the last presentation we made in class. And we're gonna go one by one and see a little bit more the assessment of each one of the risks. So as you saw in the map or in the chart that Diego showed you, we had already have a budget allocation that we think is very logical, and we're going to go step by step in each one of the different strategies in order to complete that budget allocation. And of course, the different strategies may have some costs that are bigger than others. So first of all, and one of the most important risks is an operational risk, and it is the changes in the environment, which are political and economic, and or in legislation. So basically the PEL, part of like the PESO, political, economic, and legal issues. So we allocated $250,000 for that, and this is going to be one of the most important, budget allocations that we made. So they have four different risks, four different strategies, which are risk control, risk avoidance, risk transfer, and risk finance. So in the case of risk control, what Grupo Argos can do is to have a strategy of losing prevention, or prevention of the losses. So they are monitoring, which is traditional, which means just doing general monitoring that the risk is not going to happen, and diversification, which is alternative, and it is to make different investments and make different movements in the risk, so as that if there is something that actually happens wrongly in terms of political or economic issues, it is not the main thing, the main or the only country. So for instance, Grupo Argos has a lot of operations in the United States. One way to diversify would be to have more operations in more countries, just in case that if the United States has a crisis, then they don't have such losses. And of course, this can happen with any country, included, for instance, Venezuela, which is a very affected country. And, but since Venezuela is not the only country they invest in, then this is diversified. In terms of risk avoidance, they also can decide not to enter certain markets due to high risks, or maybe because the risks are too high for the expected return. So let's say Trinidad and Tobago, they have to do a lot of stuff and it's not a big market. Okay, in terms of risk transfer, this is one of the only ones of the risks that we're analyzing that actually can have an insurance. And as you know, there is political risk insurance in case that some countries have issues in terms of political risks, like manifestations, or that they have any coup d'etat or something like that. Then there's an insurance that will cover the potential losses. And finally, in case of the risk finance, what they can do is do something that is part of the funded risk finance, which is contingent capital. And in this case, they can go, let's say, to Bancolombia or to a big bank and tell them, if something happens, then we're going to have this capital that is going to be lent at this interest and in these rates, and we will be able to cope with the expectations that we have in case that something happens. So let's say, in case that the American economy has a very high inflation, then we can have an allowance of the bank so we can manage the contingents. That's the part of the changes in the environment. The second risk is the damage to the company's reputation. We allocated $150,000 for this. And the risk treatment will be the risk control. Basically this, because it's the other stuff is a very punctual and very objective stuff, and reputation sometimes doesn't cover that, like punctuality or specificity. But in the case of the risk control, they can do two things: loss prevention and loss reduction. Prevention if it happens before, reduction if it happens after the risk actually happens. So in terms of prevention, what they can do is training the staff, giving them the guidelines, and having a very strong monitoring from the corporate board, so as the company doesn't have a damaged reputation. And in terms of loss reduction, it is important to have very good emergency training. So if something bad happens to the reputation, the losses are not as high because the people are trained. So if, let's say, one of the plants burns, then that everybody knows what to do if the plant is burning, as to have less losses than they would have in the case that they wouldn't be trained. So that's also very important. The third risk is the fraud, corruption, money laundering, and terrorist financing. We allocated $250,000 for this, and the treatment that we have is of two different strategies. First of all, risk finance, in this case funded, which is reserves. Why? Because it is likely that at any given time, fraud, corruption, money laundering, or terrorist financing might happen, especially given that Grupo Argos operates in Colombia. And the headquarters are in Colombia, so this might happen. So we think that it's important to have certain reserves just in case that something of this happens, even if it's the fault of the company or if it's an external fault. So if there's corruption, there should be some reserves of the money so as they can make a difference when they have the problem that they could have. So this is before the problem or the risk. And in terms of risk control, we have loss prevention, the traditional one, which is again training staff, giving guidelines and corporate board monitoring, and then also an alternative one that actually the company thinks is very important is to have specialized external audits. So not only inside the company making the difference, but also asking for an external voice so they can know what to do, and they can know that they are not incurring in this type of frauds or corruption or crimes. The fourth one is a natural risk, and this is the impairment of the environment and or the community. The budget is 100,000, taking into account that this one is the farthest away in the risk map from the company. And the risk treatment is basically risk control in terms of loss prevention. So they are going to define environmental management plans and negotiate with the community. Risk control in terms of loss reduction in case that actually there is an impairment, which can be marketing contingency plans. So let's say they have an issue with indigenous community, so they have a way to make marketing in order not to have such a damage in reputation because this risk would have already happened. And the third one is the risk finance, unfunded one, which is cash flow. Cash flow is used when it is not very several. So what we're thinking is the impairment is not going to be very several for the company, so they can solve it through cash flows, just reallocating some cash. And finally, the financial one, the financial risk, which is the loss of financial flexibility. We allocated 250,000 because this is very important for a holding group in terms of investment. And we have three different risk treatments or solutions. First one is the risk finance. This is unfunded, and this is basically captives. So having an own company in another country ensure the risk of having the loss of financial flexibility. The second one is the risk finance, the one that's funded, which is contingent capital. Again, having some sort of relation with the bank, so in case they lose the financial flexibility, they can get the capital. And the third one, and this is not very common, but this would be still a good solution for Argos, would be the risk transfer. So having the equity which is post loss and means issuing new shares to collect funds, which means putting up on the stock markets new stocks so they can collect money, and even though they lose some of the percentage they own of the group, well, they will have some money to cover up that loss of financial flexibility. And Diego will conclude.
Perfect. As you can see, our time is running out. So what are the key takeaways, our conclusions? It is paramount that a company like Grupo Argos has an ongoing monitoring of the dynamic key risks. So the risks we have mentioned, we have identified and analyzed, they have to be monitored the whole time, because some of them, they change faster than others and will have also a bigger impact on the daily business of Grupo Argos. Of course, it is very important then that the whole company, all the employees are involved, inclusive the board of directors, because it starts from the top. And also it is important to diversify all the risks, such as having different suppliers, different clients, and so on. And this is also related to the segregation we have seen in the risk control part. And of course, having always an updated BCM. As you know, what BCM is, business continuity management. So what happens if there is an accident or whatever, if we are running out of resources, we have to be aware of that, and we need our employees, they need to be trained. And of course, we have to implement different approaches regarding risk treatment because they can work together better. And yeah, that's paramount for Grupo Argos. And last but not least, always keep in mind strategic objectives and involve all the stakeholders so we can close the gap and close the circle and have a good risk treatment.
That's it, guys. Thank you very much for your attention. Thanks to the teacher for his very good content and recommendations. And just to conclude, Grupo Argos is a very interesting company in terms of risks. And as you can see, this would help Grupo Argos with these 5 big risks that we identified. Thank you very much.
Thanks. See you.
You can check the references and see you in the next class. Bye-bye.